Good afternoon, traders. Welcome to our training. And today we want to look at a simple trend analysis. So let me first start by looking at what is a trend. A trend is simply the general direction of the market. It is an upward trending market. It's a downward trending market. A trend. And then we get into the strategy. We look at several things that you can combine to get a great setup in your strategy. So I'll go straight to
that is moving up and down, up and down. Of course, you know the green candlesticks are bullish, the red candlesticks are bearish. When you look at this movement, let me put a line, you realize it's up and down movement. But if you look at the general flow of the market, you will see that it is making turns at levels that seem to be at levels that are almost pointing us towards one direction. In this case, let me use objects to mark those points. And this is what will help us to know how to identify a trend. First, you will look at the turning points that the price is making. For example, this price was rising, it reached that level where I've marked with a gray box, started going down again. The price went down all the way to that low point, then started going up again. It went up to that part there, and then it turned downwards. So the trader, what you look at is the areas that the price is making turns. Once you identify those areas, then you join them with a line, and you're able to see a general flow of the market. Like in this case, you can see these gray boxes, they are sort of flowing to the downside. So once the price hits that area, it's no longer going beyond it, but it is just reversing right about there. And this is a downtrend. For a downtrend, you realize the price makes those high points where it is turning, it makes lower highs, lower highs. So this one becomes a downtrend. And now what we're expecting from this, how we're going to predict our price in this case is we are anticipating that anytime the price comes near this level, then it's likely to reverse again to the downside. And note my word, it's likely. It's not a must, but it is likely to reverse the downside. This is our predictive approach in using a trend. So once we have this trend, just repeat again, once we have this trend, then we are expecting that the price might keep that trend. So what we're expecting is anytime the price touches this level, we don't know at what point, we don't know when, but once it touches that level, then we anticipate that the price is likely to reverse and start moving down. And that's what you'll be focusing on. So one way of identifying the trend is just note the high points that the price or the candlesticks are making a turn to the downside, just like I've noted with these boxes. So if you can find like 2-3 points, then that is enough to give you a trend if you join those points. So once you join it that you know the trend, then your strategy is going to be such that you'll be waiting for the price to come along that area again. Let me use a blue circle, so it's going to be easier to highlight. So I'm using this red circle to highlight. I'll have it filled in red. So once you identify these areas, for example, this is a high. The next one is a high, but is a lower. The next one is a high, but it's a lower. So if you find the price is moving in such a way that it's not breaking a certain level, then you're going to anticipate that once the price reaches that level again, at that area, it's where we are looking for a likely reversal to the downside, and then we will enter sell trades or short positions, or we'll sell from those areas anticipating further downwards. So if the price goes back again to that level, we anticipate that the price is likely to keep going downwards, but we have to wait for confirmation. Now, this is a trend line, and you get a trend line by joining these peaks or highs of the market. Which other way can you identify a trend? So if you go to the insert and you go to the indicators, on the trend, you will find a lot of indicators which you can use to find a trend or the market trend. The simplest one to use is the moving average. So in this case, I will select moving average, and I will use a period of 100. Period simply means the number of these small candlesticks which have been used in getting that trend. So let me explain a moving average a little bit. A moving average, it is a line which is calculating the average, like the average, using the average closing prices, it is calculating the average closing prices of a specific number of periods. For example, if I put 100, I mean, what is the average closing prices if you select close for the last 100 candlesticks? And so it gives you the general flow of the market. Now it gives you the trend. Okay, I can change that to 100. If you can see period, I can change it to 50. So in that case, I'm specifying that let me get the average, the direction of the market based on the average closing prices of the last 50 candlesticks. And you can even put it bigger, even 200 or even 150, whichever number you want. But the commonly used ones, you can have 20, 10, 20, 50, 100. Just depends with your choice and how it's able to give you a clear direction of the market. So in this case, let me put 100. And then I click OK. And in this case, we do not, it is not giving us a clear direction of the market because it is up and down. So it's always good that you also use or learn how to draw the line yourself, join the peaks. It becomes even better. But a moving average is one other tool, very simple tool you can use to find the direction. Let's go to the next instrument. So here we have XAUUSD, and we are on a 4-hour time frame. And this is a clear example of an uptrend. So let me zoom a little bit. I realize that this price is not going below this line or this moving average. It is moving average with a period of 100. Now, remember I said for you to identify a trend, you're looking at the turning points or where the market is changing direction. For example, at this level, at this point here. Okay, let me use different tools. So Let me use an object to show you. For example, at this point here, at this level, you realize the price was trending downwards, that it never went below this area, which is above this moving average, and then it went up again a little bit, but went up again, right? And then pulled down to the downwards, still maintaining above this moving average, this line, and then it was not able to go below that line, started going up again. Okay, so this one is a trend, an uptrend. If I join these low points, where I'm marking with the boxes, then you see what we have is a general upward movement of the prices. So let me use a line and join those points. You realize you have an uptrend. So that is a trend. So you can either use a line that you're drawing yourself by joining the lows of the market, or the points where the price is turning to the upside, like you can see in these in what I've drawn here. Okay, it's bouncing off those levels. So you can either draw the line yourself by identifying a series of low points which are occurring along the same level, or you just put this moving average and it will automatically smooth out the price. Now, let us go to the strategy. I was explaining the tools that you can use. Let us go to the strategy. The strategy is such that you are anticipating, you are setting rules based on the trend to anticipate the likely time when we'll have an upward move, and then you can buy, or the likely time when you're going to have a downward move, then you can sell. So in this case, what you do is, number one, identify the trend. Okay. Number one, identify the trend. Number two, wait for the price to go back to that level to test the trend. So you want to establish whether it is going to repeat the same behavior of turning around the same level. And how you confirm whether the price is going to, whether the price has got a high probability of changing, you look at the types of candlesticks forming. So you have to wait for the price to touch that level, for example, this level, and then look at the type of candlesticks which are forming there. So whenever you're seeing a very big candlestick with a full body, then that's a strong move up or down. For example, if you look at this, if you look on this chart, you will see we have very big green candlesticks or very big red candlesticks. Then that's a strong move. But I need you to note that at the point where the price is touching that line or that trend, or the level where the price is turning at, the candlesticks reduce in size, okay, and they have got very long tails at the top or at the bottom. That's one of the characteristics we need to see. Then next, you wait for the price movement to give a confirmation such that you have a candlestick that confirms the direction that the price is turning towards. So in this case, for example, here, this price was dropping to this point. Let me zoom a little bit. This price was dropping up to this point. We have got very strong candlesticks going lower, showing strong selling volumes. But then we have one candlestick here, which is a pin bar, which is showing that initially there was a very strong movement downwards, but then the price could not sustain, or the sellers could not sustain that. Then there was a strong buying activity that pushed or rolled back all this downward movement of the price, rolled it back all the way up. So this is an indication of strong buying interests or strong buyers getting into the markets. Then after that candlestick, that one acts as a signal. So up to that point, these are the steps which are followed. First of all, the trend is upward, as we can see in this one. That is the first thing. Step number 2, we wait for the price to come and test that level, which is here. The price actually tested. By testing, I mean the price falls down to that area and you observe what is happening around that area. Is it going past that area to the downside, or it is failing, just like it happened previously? Is it failing to go past that area? That is testing. Once it tests and then you realize it has failed to move past that area, then you go next to confirmation. That one gives you a signal. Then you go next to confirmation, which is look at the next candlestick which forms. For example, after this pin bar that you see there, the next is a green candlestick which opens, and it does not actually go below, does not even go lower below the wick or the tail, the low of the tail. Actually goes up and closes above the tail. That is the confirmation candlestick. That is a clear indication that there is a likelihood of the price keeping on going higher, so you can buy. In this case, someone could have decided to enter a trade at let me use the lines now to show. Just enter a trade at this point here. Enter a trade at that point, and then might have a stop loss on the lower end and have a target at the peak. And this one trade came up quite clear for gold. Okay. Let us look back, or let's even look at the upper part. Let's identify a trend. So which are the peak points, or the points where the market is turning to the downside? Looking at this screen, I have this level here. After this point, the price turned downwards. The next one, let me use these zones, they'll be easier. This zone here, the price turned to the downside. Look at the candlestick which formed there. It has a very long tail at the top and a small body. That is a pin bar. Okay. Let us look at the next high point where the price turned to the downwards. Here, this level here. So you identify one point, identify another one. And if you just look right ahead, there is the next high point there. Now, once you have 3 successive points such that they are forming a series of levels where the price is making a turn or is unable to break, then that is your level. You take a line, then join them. And here we're just looking at that level, not a specific price. So here we have a kind of a level that the price is not breaking. Okay. So what you look at now, step number 2, is look at the types of candlesticks forming there, or wait for the price to come all the way to that level. Once it comes to that level, then we say it is testing that area. So once it is testing, you wait and see, will we have types of candlestick that show the price was attempting to go beyond that area, but then we have weakness, or we have rejection, and then it's showing likely change of the trend. And how do we see that? We look at these types of candlesticks. Again, let me use that circle to show you. So you want to identify these types of candlesticks. A candlestick with a very long tail at the top and a small body. This is the candlestick we're looking for. I don't know how I can highlight it better for us to see. This candlestick that is here. Let me use a different color, maybe for a little bit of clarity. Good. So I'm talking about this candlestick, the very long tail and a small body. The next is the confirmation on which opens and closes to the downside as well. But you might want to involve other rules or use other rules that can help you even get a higher probability entry. So with this one, if someone decided to enter a trade, then you'll have your stop loss at the top and then enter this level. You can see there was a very big move to the downside, and this one could have been profit. Next, the next level here, the price came and tested this area, and then we had a candlestick with a very long tail and a small body. Then the next was a confirmation candlestick to the downside. So this one served as an entry. You realize that even after this entry, price started going up, but after some time fell down again. Okay. Even on the lower side, we have this area here, which has been acting as an upward trend. You can see we have this blue line, which we had drawn ourselves, and we have the moving average. You can use either of those to identify a trend. And then once you have the trend identified, wait for the price to test. By talking about price testing, it is wait for the price to come and hit that level, observe what happens there. That's what you're calling testing. So like at this point, the price is testing that area, and after some time you see there is this specific candlestick which has a very long tail to the downside and then a small body. After this candlestick, or with this candlestick, you get the signal. But then on the next one, you get the confirmation, which is a candlestick which opens and confirms the upward movement. That's where you will have your entry, and you can see the price really went up all the way up to the other trend level that you can see. So the rules here, because that's what that strategy is. The rules here are, number one, I don't know whether I can now write something. Number one, identify the trend. Identify the trend. Once you identify the trend, then number two, wait for the price to come and test that trend. Testing means wait for the price to come and touch that level. And then that's where you're observing, observe the type of candlesticks that form there. Then once you find a signal, then wait for a confirmation and enter your trade. Just those three rules. I don't know whether I can write them. Let me see. Let me share a whiteboard. Looking for it. Just hold on for a second. I thought I had a whiteboard. Can't find any. I can't find a whiteboard, but I was looking for it so I could share. No worries. Those are just the steps. I will have us look at a few other examples, and then we call it a session. So let's move next. That's an example of gold. Let's go to Euro USD. So look at this example here. This is on a daily time frame. On this daily time frame, I want us to check how this trend worked out perfectly. So look at this downward flow. This is a downtrend. So for this strategy, you want to make sure if you're in a downtrend, then look for trades to sell. If the price turns into an uptrend, look for trades to buy. Okay. That is one of the rules that you have to keep. Now, let us look at it again. So in this case, I will put my small circle. So in this case, how do we have this trend? What are the things that help us to identify this trend? Of course, if you have that trend line, it just draws those levels automatically. Okay, it's just be smoothing out automatically. You don't have to do the work, just have to go and set. And where do you find it? Just go to insert and then indicators. Then you go to the trend, go and select moving average. Once you select moving average, you will have to select other settings, like for example, is it 100 period, and then the method, is it exponential or simple? Okay, the difference between these ones, for example, I'll just explain two, simple and exponential. Simple, we just give an average. Just take the average closing prices. Like if you have 100 period of 100, then it means adding the closing prices for the last 100 candlesticks and finding the average. So the line will be plotted based on that average. If you go to exponential, the formula which is used to do that calculation, that formula puts more weight to the most recent candlesticks. For example, here we talk of period 100, then the most recent candlesticks will be given more weight. So you will see a trend which is like more updated or more up to date. So let's just use the settings 100, and then we have exponential. You have this line here. So these are the areas that if you were to draw yourself, then you note those peak points where the price is making a turn. The next one is here. The next one is here. The next one is just around the same level. We have the other one here. And you can see it's been a very nice downtrend. Okay, very nice downtrend up until it changed at this point down here. Now it's changing into an uptrend. Okay, so rule number one, we said identify the trend. So our moving average has shown us the trend. Number two, look at the points where the price is touching that line to test it. We say it is testing the trend. So at this point is where you're looking to identify now an entry. So at this area, you're looking at specific types of candlesticks. And for example, let me zoom at that point where I've put the, where I've highlighted. So we're looking at several examples there. I want us to look at this point here. You realize at this touch point here, we had, let me remove this box at least so you can have it clear. At this point, I need you to note the rules that we said. So that is the trend. The price has come and tested this area, but look at the type of candlestick that is forming there. A candlestick with a very small body, okay, a very small body, but then it has got a very long tail on the upside. That was the signal. Next, then we had another candlestick that didn't move much. It's an indecision candlestick. The next was this candlestick which broke lower, below the wick of this pin bar. That could have been the signal. That could have been the confirmation to enter. Then after that, look at the movement downwards. Now I'm having a question here by Michael. Hey, Michael, thank you so much for attending this. Your question is, how do you avoid fake outs when drawing trend lines? Should they touch their bodies or wick? Well, I'll address that question. But first, how to identify fake outs? The thing is, look at these pin bars at the right places. For example, if this is a downtrend and you find there is a pin bar here, for example, down here, there's another pin bar, which might signal you that the price is starting to go up. But this one is not in the direction of the trend. The trend is downwards. If I zoom a little bit, you can find the flow is downwards. So one way of dealing with fake outs is make sure you find the trend, identify the trend properly. How you identify the trend properly? Use a moving average. If you were to draw and your question is in line with drawing. If you are to draw, I want to emphasize that the levels which you're drawing is just a level of, or a line of best fit. Let's say that, which means if I take this line and join these levels, that is a downtrend. But there's a time when the price at the middle here, let me use my small, there is this point here where the price did not really obey this line. So what we want to see, this one does not change the fact that we are in a downtrend. So you're going to ignore a few times when you have outliers, but if you have got the line fitting on most of the structure of the market, then that is a good line. So how to avoid fake outs? Just go with the line that gives you the best fit. Whether it is going to be at the top of the wick or the bottom of the wick, that one will be addressed by the fact that the line is touching most, or the line is just highlighting the broader or the many touch points. Let me not use a lot of heavy terms. At this point here, you see it reached a point and now the downward slope is even more steep. You can decide to use another one and join those levels and you can see how it is flowing. Okay, so if this line is not addressing it clearly, then you can add another line, a trend line, which is now touching these points. Okay, you can see this is a downtrend, but at this area here, it did not quite touch it, but it still acted as a resistance because it's a downtrend. Okay, so how you know whether it's buy or sell, whether it's time to buy and sell? Well, sometimes it's very hard to be like really very specific on when this price will start going down or start going up so you can buy and sell. But what you need to look at is just follow the rules. For example, the rule is, in this case, what was the trend? The trend is downtrend. What am I waiting for? I'm waiting to see the price testing that area and then fail to break that area, change the direction to follow the flow of the market. So if it's a downtrend, you want to sell, but wait for a confirmation candlestick, you enter the trade. You cannot be 100% sure, but you are trading based on a high probability setup, which had repeated itself several times. So like in this case, at the point where the price is touching that level or testing that trend, look at those candlesticks. They are different. They didn't really form the same way. Like at this point, we didn't have a pin bar, but we had a set of two candlesticks where one is bigger than the previous. So moving upwards, the movement was not big, but downwards, the movement was bigger. So we call it an engulfing candlestick. So you can either look for the pin bar or look for an engulfing candlestick setup. Same case here, we had several candlesticks forming, and then we have an engulfing candlestick. So here we had a pin bar and a confirmation. So master those setups and you will be easier. Hey, Anne Terry is asking, direction of UST. Well, based on the CPI data, I mean, let's look at the market trend. So of course, that is news, and I would want us to cover that one in a different session, but because you've asked about it, then we can mention a little bit. So CPI is the data which helps, which talks about the inflation. So whenever there is high inflation, it weakens a currency. When there's low inflation, then it means that the currency gets a little bit stronger. So you're asking in terms of USD. If you want to understand that one better, it's going to look at the dollar index. Okay, but in this case, if you look at GBP, USD, for example, the trend has been downwards. So in this case, it means that it means that the pound has been getting weaker, USD has been getting stronger. Okay, looking at this trend here, this is a downtrend, and look at how the price is obeying these levels. So let me identify this point here, and you can see how the pin bar came, touched that level, went down again. Next touch point around here, we got an engulfing candlestick. The next one here, and the next one around this area. So what we are watching right now is this key level here. So we are having a characteristic of a pin bar forming. A candlestick is more of a pin bar, but we have to wait up until it closes, then have another one forming to the downside. Those are the rules that we will follow. Jerry asking, what's the best time frame for using the trend line for the gold? Well, this trend strategy, you can use it on any time frame, but of course, if you go to lower time frames, then you will have a lot of noise. So I would recommend maybe 1 hour going all the way to 4 hours and daily. That would work better. That's what I would recommend, but it can work even on lower time frames, because if you go even to 15 minutes or even 5 minutes, you can find a trend. But if you find it, it might be short-lived, might be, or just give you a very small movement once you enter. So that is all on trend. So these are the rules that you follow. Number one, find the trend. If it's a downtrend, you're looking for trades to sell. If it's an uptrend, you're looking for trades to buy. So for example, if you find a downtrend, then wait for the price to come and touch that trend line or that moving average showing you the trend. Once it touches that level, then wait to see the types of candlesticks forming there. If it's a candlestick with a very long tail at the top and a small body, it shows that initially there's a strong buying, but now selling is getting in. So wait for a confirmation, which is another candlestick that confirms the downward move, and then enter with that one. Those are the rules, just 3 simple rules. Find the trend, wait for the price to test, look at the candlestick showing reversal and the confirmation, then enter the trade. So you perfect that one over time. So if it's a downtrend, you're looking for sells. If it is an uptrend, you're looking for places to buy. Like in this case as well, these are the areas I can highlight. That one there. Then we have that. You have all these areas. Those are likely areas one could have taken a buy position. Why? Because this is an uptrend, as we can see on this line. And with that, I will call it a session. Thank you so much for taking your time to attend. See you next time.